Welcome to the Pulse Check podcast. I'm in Zurich, warm and sunny today, and I'm here with Philipp Mächler, partner at Synpulse and also responsible for engagement banking. Great to see you. How are you today?
Thanks, Salomon. Definitely great to see you. I'm good. I hope you're fine as well. Thanks for having me here.
Of course. Yeah, well, I'm almost a guest today as I'm visiting Zurich. I start with the usual warm-up question. So what's something that makes you unique, that defines you, that might be something that not everyone knows about you?
Yeah, I think there are a few things I could tell now, but I try to tell it also with a story. So I think when I was around 10 years older, I managed to catch a tram. So tram is the public transport here that I just barely missed. And I caught the tram 8 stops later. And I truly believe it's still a kind of record in the city of Zurich here. And I think it has a few aspects to it. Well, like I guess Singapore and Hong Kong, Zurich is also a city where public transport is relatively often used. I use it a lot. I'm also very sporty. I don't like to give up. I think that little story symbolizes it quite nicely, and I guess most people wouldn't have known that.
Yeah, that's a funny story, and I look forward to see you in Hong Kong trying to catch an MTR that you miss. It's probably a bit hard. Yeah, I know that you are also into sports and running, same as me, and definitely an ingredient that is important as consultant. So let's dig into the topic of today, engagement banking. Can you maybe summarize or explain a bit what is engagement banking for you?
Engagement banking is the ways how our clients' banks engage with the clients of our clients. So their clients, and that's nothing new, obviously, but I think with the world becoming digital, the way how banks engage with their clients has changed already fundamentally and will drastically continue to change in the future as well. One very specific area that we see opposite engagement banking is the rise of mobile apps, even super apps, rise of neobanks that is very much related to that. But in the end, it's one aspect of how that digital engagement is happening and how it will continue as well in the future.
Well, you mentioned apps. I learned recently that most users, especially of the young users, are actually only using probably around 5 apps on the mobile phone, even though they have installed plenty. So, and then you have the banks that every bank has at least their own mobile app. One of the banks I'm working or using, they basically have 5 apps, one for retail banking, business banking, trading, brokerage, business, and so on. So definitely not a super app experience. So in the current state of today, engagement for me, financial services, there's still some leeway to go. How do you see it?
Yeah, I definitely agree to that. I mean, it's not... I imagine it's not something that you like doing or even love doing, where you kind of, oops, I spent another hour in my mobile banking app, but I didn't realize how quickly time passed, so that's not happening yet. And it's, for me, for sure, one of the core problems that the banks have with app today. I think we have been talking for years already how big tech players, other players are coming into the banking market and how they're competitor, and they're also launching their accounts and cards and products. But the fact is, with engagement banking, not only the tech companies that offer banking products are competitors. Actually, all companies that fight for the engagement with your client are competitors. If your client spends 6 hours per day on TikTok, he's or she is very much less likely to spend time with you as a bank. Right, and I think that's certainly one of the key challenges we see in engagement banking or in banking actually over today.
But that's also for me, not fully understandable. Why would banks see rather other social engagement apps as competitors and others partners, and even other financial services institutions as potential partners? And we've seen launches of Apple in collaboration with Goldman Sachs in the US, which unfortunately will stop again being cool as well. But shouldn't it be much more a partnership? And that said, as you said, not everyone is spending hours in terms of banking. Maybe investments more. I mean, looking at my investments, sometimes I do it several times a day and see markets moving, and then you are a bit engaged due to also the fact that you're emotionally attached to how the market performs. But typically, especially retail banking, it's probably more that you are on social media. You maybe look at a nice place where you could imagine spending your next holiday trip. And then, of course, to book the trip, maybe also to look at, can I even afford that trip? Immediately goes into a conversation of financial services, products, and so on. And that's where I still believe there could be more than in type of embedded engagement, in a sense of I'm not just now switching to the banking app, but within that super app, I will then bank. Is that something you see as a trend?
Definitely. I mean, there's actually multiple dimensions to what you said. I mean, one dimension is for sure, yes, also in Switzerland, we don't need 300 different mobile banking apps in the App Store. Probably already confusing now within an individual bank, as you say, how many apps there are, and typically not what you want as a client. I think another aspect, it's not only about time. And when I said X hours engagement banking, it's more about quality and time that the client feels is well spent. And that time and quality has, in these days, a lot to do with integration, business integration, technical integration, being able to serve one very specific service to a very specific client, not a client segment, but that very specific client that connects various parts dynamically. And this is a role these super apps or the orchestrators also around these super apps can play, because they connect these different experiences, different services at the time when it matters.
So let's dive into a bit of the next topic on differences, maybe on a location basis, as I'm visiting Switzerland here and you're the expert of the market here. What do you see specifically trending in Switzerland, and maybe also how does it compare to global trends? And maybe I can also adopt or bring certain learnings back to Asia from Switzerland.
I think there's almost a consequence of this oversaturation of mobile apps that we tend to see in the Swiss market, but in many developed markets. As a consequence, I think there will be a further consolidation push. So some of us might have thought after subprime and now after CSUBS, the big consolidation maybe already happened. But to my mind, in digital banking, digital engagement banking, we don't need FINMA issuing 300 different banking licenses. We might have as many players in the financial market, but not everyone needs a banking license. So I think that consolidation, that integration will happen certainly on the business side as well. We see obviously many banks stuck partly with legacy architecture, coming up with the idea we also now need a neobank, but we know, right, that we have a few very successful neobank, but then on the other side, most neobank projects fail and even destroy money. So I think finding that niche for you as a bank in that digital world, and then also integrating that niche into the overall digital world, that's absolutely a key trend, and I think something that probably many haven't figured out yet.
You mentioned the super app before. As I live in Hong Kong, we have, of course, from China, WeChat, and the experience where you really are in that super app, and you can then have mini programs of the different banks. So you mentioned that there's a trend in general, but is that something you already see in Switzerland as such?
Yeah, I think we've seen it with some of the big tech companies integrating more and more into mobile apps. It also happened on the website, by the way. So website or single web application type of things like Google did with Gmail. You suddenly had a lot of different things there. And one of the last players that was resisting a little bit to that change to some degree was Microsoft. Not sure how many different Microsoft apps you still have on your phone, but probably it's more than 10. At least I have over 10. But even now, and one of the reasons for that was obviously that for Microsoft, a lot of their clients were working with Microsoft in a business context. And in a business context, you tend to still work more with laptops, desktop computer, maybe less mobile yet. But even they are now pushing for that trend. So Office 360 app that combines multiple of them, they're now coming together. On social media anyway, right? Meta is working for quite some time now on the integration of Insta, WhatsApp, Facebook, all that. So I think we feel that as a client in our everyday lives, and I think that's something banking cannot escape. Neither retail or private banking. I mean, yes, private banking is obviously a different business, but your billionaire client uses WhatsApp probably as well, right? And also uses a mobile phone with apps. So having that experience from other industries will set a lot of expectation as well for our banking experience.
Yeah, so I hope you were not referring to Elon Musk, because he's for sure not using WhatsApp, but X, of course. But S is always on X, and also X has already certain financial services capabilities embedded, for example, trading link and so on. I mean, to round this off, I do sense that banking, unfortunately, is still lagging behind a bit, in a sense of, you mentioned also websites before, there's certain capabilities that are not existent on the app with some of the banks I work or I bank with. But I have to go online, for example, address change, passport change. And I would expect nowadays everything is mobile first. That's number one. And the second thing is, and I had a long conversation with our head of design, Fraser, in the past, is the different persona. And even I have different personas depending on what I want to do. So we're also partner at Synpulse, privately owned company. We have also business accounts where we, of course, do all the business needs for our business. And I sometimes want to switch to just from my private own account to then the business accounts and not necessarily log into a separate app, especially if it's the same bank. Even that consolidation, while it's happening, is not fully there yet. And maybe that brings me to the third big topic of the day, the future trends. Where do we see it going, engagement banking, let's say 10 years from now?
It's obviously a good question, looking into the crystal ball. It's also good to take a look back with some of the other things, because the future and the trend, sometimes it's a bit like a snail, but eventually it moves, and eventually it comes to its goal. And I think, 15 years ago, we started to use the first smartphones, and I remember Swiss newspapers kind of saying, this hype, and when will it be over, and people not believing it. And I think even 1-2 years ago, nowadays, I had people around me saying, but a client will never choose a bank because of the digital experience or how they engage digitally and all that. Whereas on the other hand, just recently there was a study out from German clients where they see, I think, more than double much use of mobile banking, web banking, but not just from any group, from the over 65-year-old. So I think that change that has already happened, it will happen sometimes a snail, also with things you cannot do right now. I'm sure you will be able to do it. When I had my first smartphone, not sure if you remember what apps you still had on it.
Good question.
I think, I had the usual, I think WhatsApp was also just emerging, Facebook, Google Maps. I think Chrome wasn't existing at that time. It was probably some whatever browser at that time. But I mean, at that time I was into board games, right? And one of the board games I liked, was like Settlers of Catan. Some of you might know it, and I was like, no way, this is coming to a mobile app. You can with 2 thumbs, and not going to work. And you have so many options and different cards and stuff. And only when I had it in my own hands, I think then, what was it, 8, 9, 10 years later, like, oh yeah, this actually works, and yeah, it's actually working pretty good. And I realized it's actually possible. I think we will see that in the future as well. It's not necessarily bound, obviously, to the smartphone. I mean, we have heard a lot of talk about augmented and mixed reality and all that. So there are all different sorts of variation of that digital engagement. Also then different, obviously, for private banking, retail banking. So private banking typically will move more into the hybrid connection, human and machine interactions. And I think for many banks, the last few years have been relatively good. I always would say they have had their share of the fat years, and I'm not sure all banks have kind of done enough for the bleak years to come. And I think we will see a lot of competition and a lot of change as well on that side, with different players coming up, some banking licenses, some not, but many will dominate one thing very well and will be part of a large platform digitally where they can offer what they do at scale.
It's an interesting point to mention before. What actually will the channel be? So first of all, I think I had a BlackBerry, which I don't know if it's even called a smartphone back then, but yes, the keyboard, exactly. And of course, we were using more the business apps like, of course, email and so on, but not really engaging apps. We probably then all laughed when Steve Jobs stood on stage and said, "This is the smartphone. There is not even a keyboard." And I said, "Without keyboard, are you kidding me?" But we all know no one uses the standard keyboard anymore. And we will probably also all laugh when it comes to our wearable computing. While I had some of the lectures 20 years ago at the same university we both studied at, back then it was only an issue of also, of course, power, of really wearing a suit with all the wiring, but then also having enough power that not at the end of the day you already need to charge. But I'm fully convinced with, of course, the glasses, but then also the maybe other elements you can use. You may then instruct, of course, through voice rather than even your hands. And I would hope that also the banks are looking into such future trends and what would it then mean in terms of engagement. Another example is your smart TVs. So you're zapping through your smart TVs, watching a game or whatever you do, and maybe there is then immediately, how can I check my portfolio on my smart TV rather than taking the phone out? So yeah, very excited, of course, to see such trends. Is there anything else that comes up?
I think one area we haven't touched that much is social impact and social responsibility of engagement banking specifically. And I mean, I'm sure, you're a proud father as well as I am, and for many of us parents, we have those questions, right? How much time should our kids then really spend on all these digital devices? Should they even spend time on them? We forbid that. And I think at this stage, how it's often handled, it's not healthy, right? It's probably also not the best for our brains and how we think. We see a spike rise in need for psychological help, also for very young people, children at this stage. And I think for me personally, it's also very important that engagement banking is, as we talked before, it's not about the volume, it's regarding the quality. So if they engage digitally, it should be something that doesn't make them sick. It should be something that makes worth of the time, best use of their time. I think that's something very, very important to follow, and I think it will be a global trend rather sooner than later, actually. And maybe closing that, I don't think it's an option to say, "Oh, it's not healthy for you. Don't do it." I think the best thing is actually to provide a better alternative. And that's, I think, that one of the challenges we're trying to solve.
very interesting. Social responsibility in terms of engagement banking. Haven't heard as much before about it, but now that you're saying it, so in summary, a very interesting conversation as usual. But starting with the channel consolidation, kind of the super app concepts, going all the way to current trends in Switzerland, but also global, where we will see it going, and hopefully with wearable computing and the glasses, even not just touch, but voice and interactive. But then with the concerns of course, the social responsibility we all have as parents, that are very good, not only trends, but important elements to look through. So thank you so much, Philipp, for this interesting conversation. I know we find you on LinkedIn typically. Any other places where we see you, maybe catching a train?
Saying running for a train. I mean, yes, Strava is a place. I recently started to train for my very first triathlon, so that's something I'm also doing. And I think I try to be often around people, also often in the office. That's just one aspect of it.
Personal engagement, not exactly mobile channel. Thank you so much, Philipp, with this Pulse Check podcast. See you next time.
Perfect. Thanks, Salomon.